Tuesday, the 14th day of January 2020. Welcome to the show. This is Business Morning. I am Bosin Omofe. Let's get the show started. Of course, the big story is what we are talking about today. President Buhari yesterday signed on into law the Finance Bill 2020, and that is the big story. So what's the game plan? What's the administration trying to achieve? Of course, the president wants to ramp up on his strategic revenue growth initiative via tax, enforcement, ease of doing business, deepen infrastructure, create jobs, bring in investment into the economy. That's actually what Mr. President wants to achieve, but it's a very tight rope for the administration. So we're trying to drill down what does it mean for the economy, for job creation, and President Buhari's next level economic focus. What's the new tax horizon? Just to put it in summary for you, that's it. You need a tax ID number. There's a higher VAT rate. There's a stamp duty that's been rebalanced in terms of the amount involved. There's an excise duty expansion, which will include carbonated drinks and all of that. There's an e-commerce tax introduction, as well as corporate tax has also been rebalanced for certain categories of companies. That's putting it in a nutshell for you. But there's also the tax credit scheme that the administration is rolled out for private sector infrastructure investment and development, as well as incentives in terms of taxation for medium and small enterprises. For the financial markets, there's something in the in the finance bill as well when it comes to incentive for higher dividend payout by companies listed on the Nigerian Stock Exchange, listed on the NESD or the FMDQ. So the financial markets are taking their bit out of President Buhari's finance bill, and of course, and very importantly, being ignored in the conversation that we're already seeing, is that the government is trying to ensure transparency and use this new finance bill as an anti-corruption tool, which is called the full disclosure and undressing in public. That's part of what this finance bill is all about. Let's bring in Yomi Olugbero, who is a partner and West Africa tax lead at Deloitte Nigeria, to drill down on this for us. Good morning, Gbero. Let's go through where we just started the conversation before. This is not entirely new, as it were, but yesterday it was a jolt for everyone. How was the entire system rattled yesterday?
Well, there was a lot of frenzy when the news broke that the president finally assented to the bill. We all waited going into Christmas and going into coming into the new year that the bill, will be signed in December together with the budget. So a lot of apprehensions by the market as to why the delay. The budget was passed and it was signed. So the next big news that everybody was expecting in December was that the president had, eventually assented to the bill. So when there was a little bit of delay, together with the fact that the chair of the FRS, a new person came into office in December, I think there was a little bit of concern as to, will this momentum be sustained? We will sign the bill and all of that. So yesterday, I think that's the excitement got returned. A lot of apprehensions. People were, all of a sudden, started asking questions. So what happened? So what happens to VAT rate? What happens to bank account with tax IDs? What happens to the incentive? When does the new law become effective? I think all of the euphoria and the energy you saw yesterday
which is a big question right now. How much of what went into what Mr. President submitted to the legislature actually come out the way he submitted it, or has been tinkered with? Do we have details of what Mr. President signed on yesterday? Do we have details of that?
Well, we have sufficient insight into what we think made it into the final harmonized version, the final document. But obviously, you can't speak with any iota of certainty until you see the final document. So because the National Assembly did a public hearing and expectedly got a few input from those that attended the public hearing. The House of Rep also did exactly the same thing. So they were meant to harmonize, the two versions and also seek the involvement of the executive if, the trust and the intention of the executive, hasn't been tampered with substantially.
So a lot went into the original document presented by Mr. President with the one he signed yesterday between Christmas and New Year that we're not really aware of what the real details are.
That's very correct. So, but I don't think the headlines have changed at all in terms of all the pocket area.
The brick and mortar.
The brick and mortar. So the
definitely VAT will definitely go up.
VAT is going up from what we've had. It's remaining. It's going to 7.5, or it's currently at 7.5 because the law was signed yesterday. So VAT made it through. All of the provisions for micro and small businesses made it through. All of the provisions around the large corporate tax credit, dividend tax, digital economy, all of those are there. But a lot of the sub-provisions to give effect to, the headline items, so what are the exceptions, what are the modus operandi, what is the, who else is covered, what kind of clarifications do we need to make? I think a whole lot of other, fine-tuning and cleaning up were happening up until the morning yesterday when the president, eventually assented the bill. So we're waiting to see the final version.
Do we expect the finance minister, to break it down for us, to give us some insight into this?
That's actually our ask, and that's the expectation. That's the kind of conversation that's been happening, even with the Minister of Finance also fully in the picture. So with a bill, becoming law like this, there's a whole lot around implementation guidelines. There's a whole lot of transitional provisions. There's a whole lot around what is the effective date. So, like yesterday, a number of folks were concerned, and rightly so. What happens? Should VAT go up exactly from yesterday? Should banks start, asking business account holders with them, to provide in or risk access, restriction to access to their bank account and all of that. So what we'll expect is that in terms of implementations for starters, there are three possibilities. So when it's either the bill that's been signed out, the law actually makes specific provision for effective date that any of those provisions come into effect. There can be an umbrella provision that gives, a certain effective date to all of the provisions, or some specifics, for example, the VAT, the bank account ID, and all of that. In the absence of any of such specific provision, you will expect that all of the provisions come into effect from 13th of January yesterday. Now, but that will cause a lot of chaos. So what we'll expect, the conversations we expect should be happening at the Ministry of Finance and with the FRS folks is how do we come up with an implementation guidelines, a transitional roadmap where, for example, we could say the bill is now signed, but the minister, for example, has powers within the VAT law to issue guidelines, vary rate, and all of that. There can be executive orders issued that can say this is a transitional arrangement, so maybe the VAT will only become effective on, say, 1st of March. So, or any date like that to allow corporates and businesses to change their systems and infrastructure to recognize the new rate. For example, the one on the tax identification number as well. We could say in order to allow businesses to approach the tax authorities and get the tax ID.
And individuals.
Well, an individual, but remember, because I think there's a little bit of confusion in terms of the tax ID for individual. Individual using their businesses for business purposes are those
the bank for individual purposes only.
Exactly.
Are not covered.
Not individual for regular savings account or for salaries account and all of that. So the bank account for individuals should be those that are used for businesses. So essentially, we're talking about enterprises, partnerships.
So if I have a beer parlor, if I have a photography business, if I run a roadside mechanic workshop, and I use Bosin or Mofaye for the same purpose of getting clients to pay into the account, that will require a tax ID number.
It will theoretically require it, but in terms of practice, the bank may not be able to separate between Bosin or Mofaye's account that is used just for your regular salary income or used for businesses. But if it's Bosin or Mofaye and co-Bosin or Mofaye enterprises, business name registered with a CAC,
even if it's a single signatory.
Even if it is a single signatory.
Yes.
It's a business account. So business accounts are different from personal accounts.
So Nigerians should not fret at this morning, thinking that their savings accounts or whatever will be blocked because they don't have a tax ID number.
There's absolutely no reason to nurse that kind of fear based on the provisions of the finance bill that is now law. there are two sections on the finance bill that deals with requiring bank to ask for tax ID number. There's a section under the Communist Income Tax Act, because that relates to limited liability company, whether PLCs or LTDs. There are also similar provisions under the Personal Income Tax Act section, and that's where the confusion came from. So because it is personal income, individuals assume that everyone having account with bank will be mandated to provide tax ID, and if they fail to, access to their bank account will be restricted. That's not the wording of the provisions under the Personal Income Tax Act. It's individual using those account for business purposes, and it is because with CAC, the same way you have limited liability company registered, you registered enterprises that are essentially business name for individuals trading. You have partnerships. You have
one-man business,
one-man businesses, and all of that.
Clearing and forwarding, whatever it is.
Exactly. So, whereas
as long as it goes into merchandising, commerce, business, whatever,
the law expects that you have tax ID because that's a business account. So, if it doesn't, then that's a normal, regular savings account.
So even if it's a one-man business,
it is desirable. The joy of the tax authority will be to actually get all individuals to link up their tax ID, but based on the specific wording of the Finance Act, as we can call it now, the specific reference are individual operating bank account for business purposes. So the practical concerns will be there are individuals that opens business account in their personal name and use it for business, unless there are specific methodology by which the bank could differentiate and assess. For as long as those accounts are open in personal name, it will be practically impossible for banks to use names and expect that tax ID should be linked together with it.
Very, very interesting. But the big story is, what is President Buhari's game plan? The finance bill should be considered an economic reform law. Yes or no?
It is. It is, and for a number of reasons. It is for a number of reasons. If you judge by the conversation that has greeted, the reintroduction of the finance bill, you see how the business, respond to just a little bit of a tweak, in rate, a little bit, of a tweak in the coverage, and who is covered, and all of that. I think it's a fantastic weapon that is available to the government to be able to, to run the economy. And the president said as much. He said, going forward, this is the way to go.
Why is it that some business groups, like the Chamber of Commerce and others, are beginning to get scared of this? Is it only on the side of the VAT or tax on businesses, but also there's a carrot on the other side of it from what we already know? So the president is trying to balance investment, infrastructure, inclusive growth, job creation. At the same time, he needs money. Mr. President needs money. So we have the Strategic Growth Revenue Initiative, which is housed with Zainab Ahmed, Ministry of Finance, which is the driving force behind all of this.
You're very right. So I think the bulk of the concerns or the negative commentaries around the bill has been centered around the VAT, and it should be understood primarily. I haven't had so much complaint with respect to many of the other provisions. I think there were a few comments by from the oil and gas sector in terms of the requirement for withholding tax to now become applicable on dividend distribution by oil exploration companies. So outside of that, the rest of the commentaries have been around the increase in the VAT, and it is understandable. So the complaint is that the economy is troubled. People have, people are facing a lot of challenges, and this is not the time where they think the economy is buoyant.
It's a VAT, Yomi, and stamp duty and excise duty.
Well,
there are three.
Well, but on the stamp duty,
yes,
what you realize that just like with the VAT, the base got raised a little to allow for a little bit of cushioning on the lower end of the spectrum. So prior to now, for every banking transaction, for example, of 1,000 naira, you cover the stamp duty. Now the threshold was raised to 10,000. All right. So I think it is on the excise that some additional taxes were brought in. And if you look at it, it's actually to balance and to compensate the existing taxed local manufactured products. So what the excise duty says is that we are removing the disincentive for local manufacturing. So if you're bringing in an item that is excisable, based on what the old regime was, it's cheaper to bring in because there was no excise duty when you import. But when you manufacture the same product locally, you pay excise duty. So what the excise duty change mean is that both the locally manufactured and the import is the same.
Okay.
So the excise duty on alcohol and tobacco, and the rest, and any other item that is excisable. So whether you bring them in or you manufacture them locally, you're now liable to excise duty. Prior to now, only local manufacturer was subject to
excise.
Exactly.
Yes,
so
breweries and the rest.
Absolutely. So unless the guys who are importing, I won't see a lot of challenge on the excise side. I think the bulk of the conversation had been around VAT. The inflation impact, the high cost of input into production process, and all of that. I think that's where the bulk of the conversation is.
If we spend about a minute or two to discuss on why this finance bill, to me, looks like an anti-corruption bill. Because part of this is to target high net worth individuals, corporate companies, foreign companies, those who may try to dodge the tax man, and those who get salaried of 100,000, but they have 100 million or 100 billion in their accounts. Will this new finance bill be able to grab those individuals?
I think it will try a little, and it's a welcome development. So if we see this bill as an anti-corruption bill or anti-corruption law, I think it's a good to have, because what we're saying is that we're reducing or we're removing the disincentive against those who are coming clean with their income, they are earning decent margin, decent profit, decent salary, and they're asked to pay. Whereas there are other big folks who earn, big, who have access, to bigger inflows, and they're not paying a commensurate amount of tax. So what this law is trying to do is, with a linkage to tax ID number, with making sure that non-resident companies who are also extracting profit from the economy are also, able to pay tax, and with the releases or with the benefit, with the cushioning that government is providing to the large corporate, to insurance, to micro and small businesses, and all of that. So you are bringing in those who were not previously in the net, and you are providing some bit of cushioning, to those who are already in and are complaining.
So
and I think at the end of the day,
for those who are government contractors, perhaps civil servants or public officials who own 7-8 different companies, and they're using it to do clearing and forwarding, procurement, whatever, playing all kind of games, this finance bill is coming after them in a manner of speaking.
In a manner of speaking, if we implement as rigorously as is
on paper.
So on paper, it appears so, but the devil is in the details, so the devil is in the implementation. So we need to make sure that we extract as much value, from the changes that the new finance bill is introducing. Let's get everybody in. So if you are running business and you don't have tax ID number before, you can no longer continue to do that. So it doesn't matter whether it's just, a paper entity and you're using it to siphon businesses. Let's get your tax ID number. Let's see the proportionate amount of taxes you are paying relative to your income.
Do you think the folks on Broad Street should be happy now, those at the stock exchange and the rest of them?
Yeah, they should be. They should be happy. Higher dividend payout is coming this year. Dividend tax reliefs. A lot of large corporates, whether they're insurance company, whether they're manufacturing, on the corporate tax side, like we've had on this program before. I think on the corporate side, there seems to be a lot more benefit with infrastructure tax credit, dividend tax, removal of the obnoxious provision of minimum taxes, and all of that. Insurance company have a relief now. So whatever pain we suffer, or businesses suffer from the increase in VAT is compensated by higher bottom line.
This stick and carrot thing. Mr. President is the one who is walking this tightrope, and the rest of us are on it with him. Thank you. We appreciate it. I'm sure this conversation is not over yet, is it?
No, it's not over. So as soon as we lay hold on the physical document, let's have a talk.
We got to drill it down again.
Absolutely.
The tax talk with our partner and West Africa tax lead at Deloitte, Nigeria.